All right, for more markets, I want to bring in our next guest, Milton Ezrati, Chief Economist at Vested. Milton, it's good to have you with us this morning. So, stocks finishing August with a fifth consecutive monthly gain. September, actually, though, does usually see the markets edge lower by about 0.5%, historically speaking, looking over decades. What do you anticipate for September?
Excuse me. I think the markets will probably continue the rally in September, not as dramatically. They got some very good news at the beginning of August when Fed Chairman Powell said that Fed had changed its operating framework and effectively promised to keep rates low for longer than the market normally would have expected them to do so. So that spurred this particular month's rally, and it'll probably spill over into September.
We can't talk about the rally, Milton, without talking about all of the momentum, all of the interest in these technology names. I mentioned Tesla earlier, still set to rally 2.5% after a 13% gain yesterday. You look at Apple, that stock was up 3% yesterday, up 2% today. The NASDAQ hits record high after record high. Is that too frothy, or do you anticipate that this tech momentum can be sustained throughout the rest of the year and lift these indices with the S&P 500 now about 25 to 30% of technology names?
Well, the tech has gained a great deal, and without saying that it's a bubble, I will say that it's a little strange that these particular issues are valued quite as high as they are relative to others. But I think the market here is making two huge bets, aside from the comments I made a moment ago on the Fed. The first is that we're not going to have another big spike in this virus with the new flu season this fall, and the second bet is on the election. And either if it's mistaken on either point, it could reverse field very quickly.
Okay, but what about a stimulus package? Because many people were hoping for one of those before the August recess. We still don't have that. I mean, Americans, were banking on another $1,200 check. Do you see that as a risk as well?
I don't see it as a risk because I don't think the market was banking on that. I think a lot of people were banking on it, and it would have helped the economy a great deal. But right now, the economy is coming back in the reopenings much better than anyone expected. The market's delighted to see that. It was betting on it before this happened, and it's been confirmed in that bet. And I don't think we need another stimulus package. We got something in the executive orders. It was inadequate compared with what people were expecting for the economy. But right now, the market is getting what it wants, and it is delighted to see it.
Chief Economist at Vested, I got to ask you, Milton, in your role at Vested, what do you anticipate from the jobs report on Friday? A little more than 1 million jobs expected to be added. Does that fall in line with your estimates?
It does. It falls in line with the estimates, and it falls in line with what we're seeing on the initial claims for unemployment insurance. So we should see another good jobs report. Bit of a slowdown from where we've been, but that couldn't be avoided. We'll see what happens with the flu season and with the election. Those are the issues the market is hinging on now, and the most risk is involved.
So let's talk about that. Just so we understand what is baked into the market right now, how far, given the uncertainty that does still exist, how far are you able to predict the jobs that we might see, how the unemployment rate might move in reaction to this?
Well, I think that right now, barring the virus wave, we should see the unemployment rate continuing to come down. I don't think we're going to see more than 1 million jobs forever. But if this momentum continues, and I think it will, we'll probably see more than 1 million new jobs in September, and probably close to that in October.
But that might be the
ceiling.
It sounds like, right? That 1 million is probably what people should get used to on a monthly basis? Is that what you're saying?
Well, for a couple of 3 months. It'll come in a little lower than that as we get to the end of the year, as we get through the initial flush of the reopening.
So I wonder then, a 5% unemployment rate, that technically is a picture where we are fully employed in the United States, and unemployment rate now hovering above 10%. How long is it going to take on that slow basis to actually get a full recovery back to full employment in America?
It's going to take a long time. before we get a full recovery in America. Right now, we're making huge gains because there was a spring back from the lockdown, and the market is enjoying that. And the unemployment rate is showing that. It's come down from almost 15% to just over 10%, which is a remarkable move in just a few months. But it's going to start slowing down, and I don't think we're going to be through 2021 with a lot of good luck before we see the kind of numbers we were seeing at the beginning of 2020.
So, what does that mean for consumer spending and more notably GDP growth? The second quarter, a rate of 31% GDP contraction. What is facing us ahead when it comes to GDP growth? And is the US going to fall behind other international markets who did a better job at containing the virus?
Well, I think that we're going to. The I don't know if the United States is going to fall behind. Other international markets are coming back, better or worse depending on the country involved. Um, but I think that uh, we're going to see a continued improvement here, but it can't persist at the rates we've been seeing since May, June, July, and we'll see in August as well when we get the reports next month. But I think that the economy the pace of growth will slow, but barring some quirk, we should still continue to make gains. It'll be, as I say, at least a year before we're back to the levels, at least a year before we're back to the levels we were at the beginning of 2020.
Oh, goodness. All right, Milton Ezrati. He's a chief economist at Vested. Milton, it's great to have you. Thank you.